Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, we have a lot of earnings which we need to focus on, and GNA Axles is one of them. Posted a good set of Q3 numbers, posted a strong revenue growth, and EBITDA margins have come in at a multi-quarter high. Whether that's sustainable and what's the outlook going forward as well, we have Mr. Ranbir Singh, who's the MD and CEO of the company. Mr. Singh, good afternoon. Thank you so much for joining us. Well, you had indicated earlier that second half could be weaker than the first half, but that's not what we are seeing in the numbers in Q3 at least. What is the guidance? Because you had guided for 15%. Will you be able to actually exceed that guidance and revise it upwards basis 9-month numbers?
Good afternoon. Thanks for inviting me today. Actually, the top line has grown this year if you compare it with last year, third quarter. And this year, initial guidance was around 8 to 9%. But because of the good performance from the customers and all segments performed very well, and so we had to revise it time to time on quarter-to-quarter basis. So this time also we are going to revise our overall numbers. Top line, it will be over 20%.
Okay. All right. So that is on the top line, but it's indicating, is it something in Q3 which has changed? What are the demand trends looking like?
Q3 was, if you compare it with last year, it's exceptionally 33% plus. And Q4 also, it is going in the same pace because domestic and export both are performing very well and demand is strong. And there won't be any further improvement, but we will be able to well compare with the Q3 in Q4 also.
Okay. Mr. Singh, when you say demand is strong, domestic market is growing, export market is growing, can you quantify it for us? How did both these segments do in the quarter gone by? And what can you guide us for, say, in the next 2 to 3 quarters in both these segments, domestic as well as export?
If you compare the numbers or in CV market, in first half in India, in domestic market, CV market has performed over 60% growth. Then now, till now, in 9 months, it has performed 42% growth. But overall, the guidance from the truck assemblers, vehicle CV market, it is over 30% growth will be there. Similarly, even today, Hemant Sikka was there on the channel, and he has declared the growth in tractors, it will be between 5 to 7%. And that it's going to be very strong because there is a strong base of tractor market. And so the numbers are reflecting less like 5 to 7% because already that market has crossed 1 million numbers per year. Similarly, in export, further there is no much growth, but whatever level has achieved in export demand and requirement, it will be stable for next 2 to 3 quarters.
You know, you said that the demand is going to be stable. So let's talk about a couple of numbers, Mr. Singh, if you could give it to us. The last couple of quarters, you've been doing a quarterly run rate of close to around 120, 130 crores per quarter in terms per month in terms of order booking and sales. What is that run rate likely to be at? Secondly, your capacity, what does it stand at? Because you've increased your capacity by about 15 to 20% over the last year or so. So what does your capacity currently stand at and the utilization?
Mangalam, as last time also I have clarified, from internal approvals, every year we are enhancing our capacity by 20%. Whatever capacity is utilized in certain period, in say 3 to 4 months or 6 months, so same simultaneously we have to add same capacity to invite the new customers and to capture the new geography or new requirements.
Oh. So what is the order booking and what is your current capacity utilization? Your order bookings per month?
Like last year, we have grown by 42%. This year, we are hopeful it will be 23 to 24% growth. So similarly, additional 25% capacity is on the annual, which will be completed by mid this year.
Okay. Sir, you know, you're guiding for a very good exit run rate for FY23. But when you go into FY24, there will be a high base impact which you'll probably have to reckon with. But based on what you're telling us in terms of order bookings as well as growth, what is the kind of visibility you have for FY24 as a whole? Would that replicate this 20% growth or do you think that will probably scale down?
In numbers, the market can grow, but steel prices are softening, are going to come to the normal level. Freight is getting the normal level. So overall top line growth won't be there more than 8 to 9%. But in numbers, it could be 15 to 20%.
Okay, 15 to 20% in FY24 as well. Last question before we let you go. What is the update on the SUV plant utilization? By when you will be able to see it at maximum utilization levels? And what does it do generally? What all that you're telling us, improvement in growth and numbers as well, to your working capital days, because they have been elevated?
In SUV and small component division, already we have crossed utilization over 50%. And from May, June, mid this year, utilization will be 80%. And after that, we are planning some capex to debottleneck certain areas. So then further growth will be there by end of this year. As so far as working cycle is concerned, it is inventory net is a total cycle is 120 days. So it is historically also it's because our export business. The cycle is of 5 to 6 months recovery, inventories and shipping and all. We have to maintain inventory at the customer end. So overall, it's 120 days.
All right. Thanks a lot, Mr. Singh, for joining in and giving us all those details. Wish you good luck for the remainder of this year, though we would have liked to speak a little more about your operating performance as well. But out of time right now. With that, we'll step into a short break. But as we do that, here's some exciting news for the most coveted leadership awards. They're back. CNBC-TV18 honors the visionaries behind outstanding businesses, catch the most influential, credible, powerful, able